Hey everybody, welcome to Mortgage Today for Wednesday, July 31st, 2024, and oh, what a day it was. Happy end of month, everybody. UMBS were in the green in early trading, up 7 basis points. Meanwhile, stock futures were up 61 points. These aren't the biggest market movers to be sure, but they helped bonds improve just a bit after a flat overnight session. It also didn't hurt that the Treasury announced unchanged quarterly auction amounts for the first time since the upward issuance spiral began in the onset of the pandemic. The Fed announcement at 2 p.m. came and definitely brought some news, but this morning we got ADP Employment, which came in at 122,000 versus 150,000 forecast. It was 155,000 previously. Annual pay increases fell to 4.8%, which is more evidence of labor market cooling. Unemployment cost index came in at 0.9 on a 1.0 forecast. It was 1.2 previously. Chicago PMI came in at 45.3 on a 45 forecast. It was 47.4 previously. And pending home sales came in up 4.8% on a 1.5 forecast. Job openings fell from 8.23 million to 8.18 million in June. This was a touch above expectations. Hires fell from 5.65 million to 5.34 million, while separations fell from 5.4 million to 5.1 million. The homeownership rate ticked down in the second quarter to 65.6% according to the Census Bureau. The rental vacancy rate ticked up to 6.6%. This is further evidence of the shortage in supply is easing. While the homeownership rate has improved from the depths of the Great Recession, we are still well below the levels we saw prior to and during the housing bubble. The Federal Reserve decided to keep interest rates the same in their announcement today at 2 p.m. Fed Chair Powell decisively went out of his way to avoid making any commitments about the timing of the next rate cut. At the same time, his cryptic answers are being interpreted by the market as suggesting a fairly logical reaction function with respect to the next two CPI reports. In other words, if they're okay, the Fed is cutting, even though Powell hasn't directly said it. This is all the market really needed to take away from today's Fed events, and it wasn't perfectly possible after the announcement came out at 2 p.m. The clarification has been worth a return to the best levels of the day. Opinions certainly vary as to whether today's communication from the Fed and Fed Chair Powell were dovish or hawkish, so let's focus on facts. The changes in the statement itself were bond-friendly, but not enough for bonds to rally. In fact, there was a modest selling until Powell began answering questions. Powell himself said a September rate cut was one possible scenario, assuming the data remains consistent with recent progress towards goals. He was very clear, however, to say that no decisions have been made. A strong case can be made that today's rally isn't exclusively on Powell. Geopolitical headlines and month-end trading definitely had an impact. Still, history will remember that Powell did everything he could to leave the door open for a September cut, short of promising that it would happen. UMBS ended the day up 37 basis points that we need. That 6.0 ends up at 101.46. Our 10-year is at 4.3031. So at 101.46, that puts us right up into this brand new Fibonacci range that was created with today's data. So that busts us through that 101.2 ceiling that has been holding up going back to mid-July. So hopefully we get some bond favorable news in the morning so we can stay up in that range and maybe even start getting a little bit higher so that we can tick down to that 5.5 coupon.